thank you all for joining me. Welcome here. I'm sure you've all got some thoughts about what we heard from Barbara there, but we're talking about a slightly different subject. Starting off with the global stage at the moment, a lot going on. Brad, can you summarise it in 30 seconds?
No, I don't know if I can. I mean, within just the last 24 hours, we've had, different sovereign states that are attacking each other into the various airspaces. You've got Russian drones that are being shot down over Poland. You had earlier this year the brink of World War III with, the US bombing Iran. I mean, that's before the tariffs, right, which I think we certainly thought in April was going to be the biggest hit. It's causing, I think, just a much greater level of uncertainty amongst everyone, which is why I think, hearing from the opposition spokesperson about certainty when you can have it is so important, because you can't be quite as certain about the global economic environment. You look at the tariffs, for example, that is still a big hit coming through on the economy. Back in April, the estimates were that the average US tariff rate was going to be around 22%, the highest since the Great Depression. As an economist, I hate comparing stuff to the Great Depression. That's normally the worst sort of possible. It's now come back slightly to 18, and I think what that sort of is highlighting is that all of these various global changes and ructions are not nearly as easy to piece together. There's not a linear sort of flow. Instead, you've got, for New Zealand, a higher tariff rate in August than what we had in April. That's not good, but a lot better that all of our trading partners don't have quite as bad of a tariff as first expected, so hopefully they don't get their own economies hit as much and they continue to spend more with us. Long story short though, and I think you're seeing this around the world, no one's quite sure exactly what to do with it. Different countries in the US space have been sometimes engaging and trying to come up with a compromise or a deal. Other countries have gone, I'm not going to, do anything at all. Central banks around the world have been voting at a much greater rate than normal instead of taking consensus decisions, which I think suggests that, again, everyone's just trying to come to grips with what's going on. For me, that means that, yes, you've got to have your wits about you, but increasingly people have got to be more comfortable operating in an uncertain environment and controlling the stuff that is more within their wheelhouse.
On that, Antonia, how do you deal with these uncertain times and control that? What does it mean for customers and their investments, their approach to investments?
Yeah, it's interesting when we just heard Barbara Edmonds talk about the importance of certainty, which is exactly what we don't have, and we're definitely seeing that in people's reactions. We're seeing people hunkering down more than we're seeing, the courage to spend and invest. But one of the really positive things, I think, for the kaupapa of this group is that since all that uncertainty that we saw in the earlier this year with the financial markets, in COVID, we saw 10 times our normal amount of switching between different types of KiwiSaver funds, so say from growth to conservative. We did see an uptick, we saw 2 times, but significantly different. So I think that the COVID period and the gradual growing financial, literacy about financial well-being has actually helped, because if you stayed in the market, if you're sitting, I'm pretty happy with how my KiwiSaver balance has done this year overall, and we saw so much of that this year. So that was one place that one thing we're really pleased to see amongst our customer base.
Do you hear from them that they're too scared to look at their KiwiSaver balances a lot of the time? I always say to people, don't look. When you've seen these changes, don't look.
There's different. I always make sure mine's on the second page down on my screen of my band. There was a time I wasn't looking, but right now it's actually reasonably positive.
Do look, but don't respond, I think, is the biggest part there. People do freak out. I mean, even financial markets this year, though, I wonder if it's because we've got more financial literacy. I hope that's the truth. I also wonder, though, if it's just we've become more numb to all of the changes. Someone said to me at a conference the other day, it must be fascinating as an economist with all these sort of wild changes. I said, I'd like to see, a global disruption or a big black swan event sort of, once every decade rather than every second week. Like, there's just so much hitting business, hitting households that a lot of the time I feel like you sit back and you go, look, I'll wait for the next Twitter update because the world's going to change again in 5 more seconds.
Antonia, does that make people worried about investing, though? Actually, they just want to keep their money in the bank or under the bed. And I'm sure people in the room feel that a bit, but because of that uncertainty, they don't want to move it around.
We're certainly seeing, I'd call it rebuilding buffers since COVID. So coming into COVID, people had good levels of savings. As interest rates came down, they kept their home loan repayments the same, for example, and then things got really tight. Interest rates went up a lot more than anyone might have expected, and that ate into those buffers. So what we're seeing now is sort of hunkering down, saving. We've still got good contributions to KiwiSaver, but we've seen, and I'm sure you've probably talked about already, we've seen a very elevated level of withdrawals over the last year or so, which is a sign of the cost of living crisis and the times that people are finding themselves in. So the behaviour we're seeing is that where people are able to, they're rebuilding those buffers before they have the confidence to then spend or invest further or buy a big item or those sorts of things.
And for you, Stuart, what are you seeing? What are you seeing with the effect of Trump tariffs from a trade perspective?
Sure, and for people going, why are they asking the climate change ambassador about trade? I actually sit in our trade and economic group. I run our economic division as well as being the climate ambassador, so I'm not just making this up.
As an economist, you could totally join the Make It Up Club if you'd like.
Brad does that every day.
I don't quite have Brad's skills in that space. So look, I mean, it is interesting. I mean, it is. You guys are seeing what we're seeing. It's turbulent times. In the foreign ministry, a couple of years ago, we looked strategically and said, what are we seeing out there? And I suppose what we talk about is the three big shifts, sort of the shift from rules to power, a shift from efficiency to resilience, and a shift from economics to security. And in many ways, you can see all of those wrapped up in the US tariffs. So many of those decisions are based on national security. You know, some things that they're worrying about from national security, like timber and lumber, for example, wouldn't be as obvious as perhaps some of the others, but you know, this is all caught in up. So yep, 15% tariff is now what we're facing. That's up from, as Brad said, 10% in April. So what has that meant for our trade? Well, the weird thing is globally our trade is doing really well. It's at all-time high. It was up 10% year on year in June, which is the last data. So about 108 billion in goods and services trade. That's a good number. There's been a lot of good increases. A lot of that's driven out of the European Union. I think post the free trade agreement, we've got some really, the trade has been superb there. UK has gone well, Korea's gone well. So against that, I looked at the data recently and the United States was down 3%. So definitely in stark contrast. Most of that drop had been in April, May, had actually a little bit of bounce back in June. We'll now see what it looks like with another 5% on. And as Brad points out, that puts us in a worse situation than some of our competitors. Essentially, the decision was made that any country that had a trade surplus with the US, which we do, and we don't have a big one, but we do have one. It was a standard 15% take on the spot, and that's on top of any tariffs you're already paying. So it will hurt, and it won't hurt everyone. Some people are still able to trade above that. Wine, for example, is down 21%. So that shows you that, you know, some bits of the system out there are definitely struggling. So at a macro level, New Zealand's exports are going really well, but obviously there's going to be a range of individual companies who are very focused on the US market. That 15% is going to hurt a lot, particularly when they weren't paying anything previous to that.
Can you tell us what the reaction was at MFAT when you heard that 15%?
Yeah, shoulders went down, I'll be honest with you. You know, all the signs bluntly we'd had up until then was it was going to stick at 10%, but our understanding is the decision was made at a pretty high level that 15 was where it was going to end up. And as you know, the trade minister's been up talking to his counterpart, Jamieson Greer, my boss, Vangelis Vitalis, our trade negotiator's been up there, you know, but it's pretty clear that's not shifting anytime soon. So
that was what I was going to ask you. Do you feel like there's any hope for any movement on that? That you never quite know with Trump, right, where things might go. MFAT's doing what it can? MFAT's doing what it can. I mean, there's always hope. But, you know, I'm not putting my Kiwi saver on it, put it that way. So. I'm sure Antonia, people will be pleased to hear that.
Probably a comment I'd make, because one of your trends you talked about was economy to security. And Brad and I were in Canberra last week at the Australia-New Zealand Leadership Forum. And one of the things that is probably, when we're talking about New Zealand's place in the world, we probably haven't got this alertness to security that you see in other places like, say, Australia. We feel very isolated, and probably economy's just a little bit still far more on our mind than security. As soon as you go to a place like Canberra or anywhere else in the world, that is, if you're in Europe at the moment, that is your number one thought. So we're very isolated from that trend, and I think it's good that you raised it.
But I think also we are changing. I mean, look, when there was a Chinese naval task force in the Tasman, my goodness, I was doing regional presentations out in the absolute wops, and that came up as a conversation point to an economist. Like, people did focus on that. And what have we spent or committed to in recent weeks? Something like $2 billion for choppers and similar that I think are coming from the US, which might help tip us into trade deficit rather than surplus at some point. Like, we are making, I think, some big changes, but all of these are increasingly costly and are responding to, as you've heard, sort of that more uncertain world. And I guess that's the difficulty. If you're a household or you're a business, what do you do with all this information? You're not a government that can go and make, decisions around military assets or anything else. You're sort of having to ride the wave when the wave is sort of coming in four directions all at once. And I think that's probably the challenge that I'm seeing with business at the moment is what do I do and respond, apart from just sit on my hands for a bit because it's sort of too hard to make a decision. And at some point, that's not going to be good enough because you're going to miss out on opportunities. But I guess the risk profile for everything and how we interact overseas has increased so much more. The biggest thing I think a lot of people can do sometimes, and you've heard a little bit here, is actually get out there and go and visit some of these other countries that have a different view from New Zealand to understand what they're going through, what they're looking for, because I think that's almost where you start to find the opportunities going forward.
And just quickly, audience, do feel free to throw some questions in. Antonia, on that, how are you supporting businesses? Are you hearing concerns? I mean, hearing wine drop, I don't know how many of your customers are in the wine industry, but hearing that drop of 21%, the banks must be feeling that, right?
Yeah, absolutely. And our role is to support our customers through, I guess it's quite transitional times at the moment. We take sector looks and we look at the sectors we think that might be impacted from a credit perspective and what can we do to help really, because it's sort of supporting through the cycle, and that's what we saw with COVID as well. You're really seeing businesses are pretty resilient, and as long as they know that their bank's behind them, and there's always a point in time when that can't happen anymore. But the more that we can be behind them, supporting, working out what they need to help them through a period of time, helping them, reinvest or go divert their exports somewhere else. That's good for them and good for New Zealand.
And same for MFAT. What are you doing in terms of supporting particularly those businesses that are reliant on the US market?
I mean, one of the things I was reflecting on is there's just never been a greater interest from business in terms of hearing about what's going on from a geopolitics perspective. We certainly find that in all our outreach. One of my other teams we have an office in Auckland and spends an awful lot of time, and we're increasingly sending more and more of our senior staff up to Auckland to engage with business because it is such critical. People want to know what's going on there. They want the government's view on that which is coming from MFAT. So certainly in the US space, we've been doing quite a lot of seminars, often hand in glove with New Zealand Trade and Enterprise, because obviously they've got that business to business relationship. We tend to look at it slightly more macro, making sure people understand the ramifications, making sure they're across issues. For example, when New Zealand Post just said, well, we can't actually send anything over there until we work out what this looks like from a de minimis perspective and how you actually do that. So there's been some, little bits and pieces. We have a hotline we've been dealing with directly with exporters. Obviously, NZT's got a lot more hands-on with those individual exporters in terms of, right, okay, where else can you put where else can you sell product? Where else can it go? What does that look like? So it's got to be a whole of government thing, Ministry of Primary Industries as well.
Are you working directly with New Zealand Post on that issue? I see Australia Post has managed to resolve it. Where is New Zealand Post at with it?
It's still working it through, is my understanding. I mean, I'm not personally involved, but I know we've been engaged. And
just keeping with you, as climate change ambassador at MFAT, how is the changing global perspective again, affecting climate change and affecting your role and New Zealand's role?
Yeah. First question, was anybody at the Climate Change and Business Conference this week? Good. I can say the same lines then and nobody will notice. That's great. So, I mean, look, it's an interesting one. I mean, there's been a lot of noise, but at the end of the day, only one country has left the Paris Agreement, and there's still a reasonable commitment to engage. I was over in China with the Minister for Climate Change last week with a dialogue, and the Chinese really, to their credit, are going big on renewables. I read an article recently, for example, that China installed the equivalent of Poland's electricity grid on renewables in May. So, there's a lot happening there. There's, and there's a lot of positivity. The price of photovoltaic cells has gone down, the price of batteries has gone down, the price of wind power has gone down. So all of those renewables are becoming cheaper in many ways than fossil fuels, which actually obviously is going to be a very positive step from a climate mitigation perspective. So we're seeing that. Australia definitely a lot more focused on climate change than it's been. I've got a dialogue with the European Union tonight. They haven't actually made their next commitment yet. They're still working that through because 27 countries is complicated. New Zealand made its in January, but they are definitely focused on what the next steps they can do in their economic transition. And I suppose that point of that economic transition is there are opportunities for New Zealand businesses, who are doing, really well, often in niche areas, but some really interesting work in that sort of space. I think where I see a lot of the drive, I suppose, is, there's always that saying, regulators bark and retailers bite, and it's actually the retailers that will drive this. It's companies like Nestle and Tesco, they have their scope 3 emissions, and the New Zealand exporters actually have to account for their emissions as part of that. That's what's seeing companies like Fonterra take their emissions very seriously and do what they can to improve. And that you look at Silver Fern Farms model, again, they're all about their emissions accounting as a key element of that. And that obviously falls into the wider climate disclosures regime that the government stood up, was it a year ago? So these are all those elements that you're starting to see, I suppose, offshore, that then filter through to New Zealand. And for me, it's not as much about the government as actually often about what those markets and what the importers are demanding from our businesses that will obviously drive change in New Zealand.
So you're not seeing that much of a shift then, despite what some of that rhetoric we might be hearing, or some of those shifts we're seeing?
There is a shift in some spaces, and you've certainly seen a range of US companies walk back some of their early commitments. You've seen other US companies double down. I'm not pretending it's business as usual. But equally, I think the impression we're getting, and we're going into the next Conference of the Parties, COP, in November, is those that are attending are taking climate change seriously. This is an existential threat in the Pacific still. The Pacific Islands Forum is on at the moment. You'll be seeing more statements about the importance of climate change. It's still an area where New Zealand puts significant amount of climate finance into. So I think it's still, the reality is the weather's getting worse everywhere. Cyclone Gabrielle was only a few years ago. We all looked at the economic impacts of that. That's nothing compared to what other countries are seeing. So, people know that adaptation and mitigation are critical.
What are we seeing with the effect on our economy, Brad? And I guess, and Stuart talked about that, about businesses, big and small, who are doing it despite what government policies or regulation might be. I
mean, I get quite worried at some of the extremely short-sighted and just stupid conversations I think come out from politicians that think that this sort of stuff is just easy to ignore. I mean, at the start, New Zealand's seen 5 times more days over the last decade of where we've been in a state of emergency than where we were a decade before. So clearly the impacts are coming through a lot clearer. Most importantly, though, and I hate to say it this way, but look, from a business point of view, I'm not sure any politician has yet sort of come out and say, we want to leave Paris and this is how many millions of dollars we're going to give up. Because that is the actual reality for businesses on the ground. I remember, I've heard this from New Zealand executives and various primary sector companies who have said, look, the agreements we have, if we don't meet these obligations, if we don't meet these disclosure requirements, they will drop us and find someone else. Now, I was over at the World Economic Forum's Davos meeting last year, small little, New Zealand contingent, talking to a few people, and I talked to one of the big providers, and I asked them point blank, I said, what would you do? And they said, we wouldn't be able to make our commitment, so yes, you'd be gone within the day. And that sort of shocked me. And so far, there's no politicians that has come out and said, look, yep, we're totally going to give up $800 million worth of exports or whatever it might be into the European Union. We're going to sort of deliberately say, no, we're not taking that money and hope that someone else takes it or allows us to find a new opportunity. That is not actually possible. We've got these in our trade agreements with the likes of the UK, with the European Union, with others, that we will stick to these commitments. I'm not sure from a business perspective how easy it is to just renege on your agreement and think things continue on. If any of you in this room signed up with a contract with me and then just decided, nah, stuff you, I'm going to do something different, we would have lawyers involved, let me tell you. So will other countries. So New Zealand really, I think, does have to figure out that, yes, there might be a lot of changes that are going on in other countries. We've got to figure out if we're willing to give up some of that, because that would be the actual reality.
It's also at a time we need economic growth, and Barbara Edmonds was talking about it, right? Stuart talked about the growth of renewables in China. This is something New Zealand's good at. We have the ability to have the growth in that market. Isn't that something that we should be building on and encouraging that innovation on?
I'd lean into it strongly. I mean, you look even recently at some of the work around the super deep or super critical geothermal that we're doing, you know, that there's real opportunities in New Zealand for not only for us to have better energy security, which we know we desperately need, but eventually to try and export some of that technology and some of that thinking out to other parts of the world. So I find there to be way more opportunities in that space than otherwise. And here's one that's always stuck with me. And again, I hate that it was phrased this way, but we were doing a presentation in the Waikato a couple of years ago, and I was talking to this guy, and to be blunt, he was just an out-and-out climate denier. It wasn't a thing. It was, a whole lot of lies. This other guy came walking past, clearly desperately trying to save me, and he said, "Don't worry, mate. If it doesn't matter if you believe in it or not, there's money to be made." And I thought, that is an awful way to put it. But if that's the way we need to put it, because that is sort of New Zealand's opportunity, that's where we can actually sort of make some further growth to come through. That's where you're seeing already that we're doing well in the primary sector space. Dairy at the moment's in a good position. Meat is in a better position. The likes of horticulture is just absolutely screaming through the rooftops. That's money that we can continue to grow further and further by leaning in rather than trying to lean away.
And we're looking at the growing number of events. Cyclone Gabrielle, the insurers in the room will be feeling the costs of that. The bank's feeling the costs of it, right, Antonia?
Absolutely. Yeah, I mean, we still see more stress in the Hawke's Bay, for example, than we do in other parts of New Zealand from the long tail of Cyclone Gabrielle. So absolutely.
And for you, in terms of some of that rhetoric, the bank's feeling it a bit with, I think, colloquially known as the woke bank bill. I mean, how do you deal with that pressure that you're feeling in those areas?
So I guess, I mean, for us, climate change, I don't think we can deny it at this stage, but, prove me wrong. And I see our role twofold. One is to reduce our own emissions, and one is to help finance the transition. And that's, as you say, that's a big opportunity for us. The so-called woke banking bill is sort of the negative side of that, which is saying, don't make any lending decisions based on woke reasons. Now, climate change, while it's an environmental risk, it is also a financial risk, and that's how we make our decisions. So part of me is like, well, if this bill goes through, it's yet another thing, it's more regulation, but it's actually not going to change the way we do business, because we are making credit decisions based on financial risk. So, for example, petrol stations have been in the news. We lend to petrol stations, but we, as part of that lending decision, it is, if we're going to lend you some money for 5 years and in 3.5 years' time your sales fall significantly because there's been more conversion to EV, what's your plan? And, so that you can pay us back our money, kind of. So it's, and then, if we ended up being that, I wouldn't want to have 80% of the petrol station exposure in New Zealand, because that's concentration risk, which is, again, a financial risk that you'd see in any lending portfolio. So this is looking at it from a financial risk lens, not a, do-gooding woke lens at all. And so in a way, the bill kind of doesn't make a difference to us. Does
it surprise you that there is potential regulation that is saying you should be taking more risks financially? Is that an unusual move, I guess?
Well, I don't think it is saying that you, and that's sort of my point, is it's not saying you should take financial risks, it's saying you shouldn't make lending decisions based on, climate ideology. Well, we're not. We're making them based on financial risk, as we always have done, and that's our bread and butter.
And what are you hearing from businesses and customers around their investment in renewables? Are you seeing an uptake in that area?
Absolutely. So we have a number of products that help support, sustainability goals. So we have a home loan top-up up to $80,000 at 1% for 3 years. We're seeing enormous uptake of that, really popular, double glazing, solar panels on roofs, EVs, those sorts of things. So there's a lot of, those sorts of products are common amongst the industry. So that's part of when I talk about financing their transition, that's where we can play a part.
Just to that, though, I think that there's a real opportunity as well for businesses to try and drive a wedge. We did a bit of analysis earlier this year on the financial benefits of having a Homestar 6 rated house. Good for you as a household because you've got lower energy costs and a whole lot of other stuff. But actually, ANZ Bank does provide a cheaper loan for that. That helps you in terms of your risk and your disclosures. Means that you get better houses overall. Means that, particularly in Auckland, they don't overheat to quite the same degree. I struggle a lot sometimes with the idea that you can meet the likes of environmental expectations or a whole lot of other, more social expectations at the detriment of the economic incentive. You can do both. In fact, most of the time, the best opportunities come when you're doing both all at once. You see that as well around the likes of the financial services sector as well, in terms of you're looking at a lot more as a sector around sort of risks and sort of more individual or tailored options. I think that's great because then it sends a signal to households, to businesses to go, oh, well, I thought I was the same as the guy next door. Clearly, I'm not. Why is that? Oh, I've got a stream that's running through the back of my section. Maybe that's a flood risk. Like all of those sort of changes are the sorts of signals that households don't get anywhere else. But when there is a business incentive for you, you then provide the right signals to the rest of the economy, and then that is how we keep the flow-on effects going.
Are we having these conversations in New Zealand enough about the risks and these issues? Do you think now Cyclone Gabrielle has forced us to almost? The financial industry feels it, right?
Well, I was worried at the start when after Cyclone Gabrielle came through that we would quite quickly revert to normal course, which would sort of ignore it. And I made the joke at the time that we often, especially in Auckland, people look a lot more at school zones than flood zones. But then Auckland Council came out and said there was like 280,000 hits on the flood maps. And I was like, hey, maybe we are changing this up a bit more. So I think we're moving in the right direction. I hate that it takes a massive natural disaster to cause it, but equally, I think you're seeing more and more of that coming through, more people that are thinking about, what their properties look like and what risk is. So I think we're on a better pathway. Part of the challenge, though, and I think this is for the industry, for government, for households, is that, again, it's often so hard to get a consistent view of information. Like if I pulled up my phone at the moment and looked at where both my parents live up north and where I live down in Wellington, I could probably find, I reckon, 5 different maps on flood risk, using that as an example, that I wouldn't know which one is the right one to use or which one my insurer uses versus the council versus someone else, the bank maybe. So that lack of, I guess, consistency means that as a household making decisions, at the moment I find it too hard to do it myself, which is why I often would lean back implicitly on what the businesses I'm operating with are doing. They'll tell me effectively what they're looking at, and that's when it becomes important.
I think one of the other things that Gabrielle did was turn the conversation to adaptation as well as prevention. I mean, we still have to work on the prevention, but there's also things you can do. Someone I know has a house in Australia that is not insurable for rising floodwater. It's insurable for leaks in the roof from the rain, but not. And that's a risk they take on. The house is built for it. It's a Queenslander that sits above the ground, and those sorts of adaptations are really realistic.
Are you seeing people come to you and talk about needing the support for that?
Not in a big way yet, and it's something actually within the last week we've talked about as an industry. So it is something I think that we'll see more in the future as well.
Brad, I've got a question here for you. How would you advise New Zealand employers to be thinking about their recruitment strategy right now? Hold off, keep going? It's now the time to do it?
Well, I think if you don't do it, then the risk is when things eventually do turn up that you're not going to find the people you want. We sort of saw that after the GFC industry, generally across the economy, but I mean particularly in the construction sector, but across the economy more generally, did struggle. The upturn came through and you just didn't find people because everyone had left and gone overseas. We're seeing parts of that now. We are in a different environment. We're still seeing more people move to New Zealand than we are seeing leave, although the leave numbers are at record highs. But it sort of suggests, I guess, that people are moving around a lot more still in terms of in and out. That means that you might well be able to find skills or talent, but they might not be at the right level, or they might not be able to hit the ground running. And as a business, you're having to do a whole lot more on that front. That means that when you do have good people, you do want to try and keep them. And I think you're seeing that in a variety of ways, from remuneration packages and everything else, and sometimes the benefits that are on offer, but also, working from home and the likes. I mean, we still see in public transport data in Auckland that the rise of the twits remains, the Tuesday, Wednesday, Thursday workers, to be clear, not any other twits, because people are working at home on Mondays and Fridays. Interestingly, in Wellington, we also had twits, but we've now gone towards...
You definitely have twits in Wellington.
Well, yeah, I was trying to think of the other phrase I could use, because now Wellington workers are coming in Mondays through Thursdays and only Fridays working from home, and I don't think that F-wits is particularly the way I want to go with it. Anyway, The point there is that there is a lot of opportunity, I think, out there in terms of providing more flexible working opportunities, because that's one, what young people are looking for, and I think, certainly at the moment there's big potential there. The second one is that younger people are sometimes willing to give up effectively a higher wage if they believe more in what their business is doing and they feel like their business has got the right culture and the right sort of ways about going about things. So that one's important. But probably the last one, and the biggest one for me from a business point of view, is that it's often tough in an economic downturn to try and think about keeping or retaining or taking on new staff, particularly younger people, because they don't have the experience. That's what we see in the unemployment numbers, is that youth unemployment always increases in a downturn. But given you've got the rise of AI and all the other technology changes that are coming through, it's your digital natives that are going to be able to figure out how to use that and put it into business practice, that are going to challenge you as decision makers and go, you've done this in the same way for 20 years. Why? Why are we still doing this? This is a dumb way to do it, but clearly you haven't moved on. And that's, I think, where the real opportunity comes through. And I'll give one example, and I give this a lot because I still think it's a bit of a memory in my mind. When COVID first happened, we couldn't write economic notes fast enough to actually get out information before it all changed. And so I went to my boss at the time. I said, can I use my corporate credit card to buy a Zoom license so we can do webinars? And my boss turned back to me and said, I understood less than half that sentence, but sure, go for it. What's the harm? We talked to more clients on our first webinar during lockdown. Yes, it was a captive audience, but more clients in one call than we had in the last 4 years of business. It got us right in front of people. And that was because as a fairly naive, still naive young person in the business, I was like, can we try this out? What's the harm of it? That's the sort of thinking you want to be bringing through. So when you identify young people or when you're trying to recruit, sometimes it's difficult to get over the first hurdle, but it's that sort of thinking that's really going to not only change your business up, but stand you apart from other businesses who are increasingly competitive in the space. It really gets me in the economy. We're talking a lot more about market share at the moment because the pie isn't growing, but your slice of the pie could, and you've got to stand out a bit differently. I think that's that younger talent, the ability to try something different that will provide you a much greater opportunity.
Because when you look at the unemployment figures, we often talk about the headline figure of, say, 5.2%. You look closer, look at those NEETs at 12, 13%, and the underutilisation rate, which is actually something is really important for employers. Look at those people who want to work more hours. Look at the part-timers. That's what you're talking about with that flexibility, right?
Absolutely.
That underutilisation rate at 10%.
You've got a whole lot of people that sometimes are working fewer hours than they want. You've got fewer people. You've got more people that are not working at all. You've sometimes got a lot more people who are not working but also aren't looking for jobs because they feel sort of so despondent. But interestingly, and this is, I think, we sometimes can, as economists, beat up on the economy a bit too much. I also find it really interesting that the number of businesses in operation in New Zealand is something like 1.6% higher right now than what it was a year ago. And that suggests that despite all of the challenges and the doom and gloom, and yes, that employment is down, there's clearly some people out there going, I'm either needing to look for an opportunity or I can see an opportunity and I'm going to back myself to do it. And small businesses and otherwise, but it sort of suggests that we're not sort of nearly as down and out as sometimes we can talk ourselves into.
We'll be talking to Christian Hawkesby more about that shortly, but after morning tea, I've got a question for Antonia. Would ANZ be open to extending that 1% green loan to adaptation changes for individuals, so individuals and families can make to their homes, i.e. lifting them if needed?
I can't invent a new product on the spot. My team would kill me, but that is something that we're actively thinking about.
Do you think, Stuart, from your point of view, that the industry, banks, financial services industry, insurers need to start looking at options like that?
This is always where government gets very nervous about getting out of their space. But I mean,
we're not asking you to define a government policy.
I'm not even going to try because the Ministry of Foreign Affairs wouldn't know where to start. But one of the things I do know is I went over to Britain last year with the Minister for Climate Change with a range of insurers. We were talking to the reinsurers over there about what they're worried about, and that conversation that it's how you are leaning into adaptation is important, because being the ambulance at the bottom of the cliff if you're insured doesn't actually do you any good. So how do you actually what can government and the insurance industry do more effectively to work together in that adaptation space? Because that is where, you're going to make the biggest changes, because that's where the damage is coming more and more.
And we talked about that with the bipartisanship with KiwiSaver and Super. Do you need more of a bipartisan conversation around these issues when it, with the government working with the financial services sector, working with banks, working with others to actually lift the country up and make sure we are more resilient and take those mitigation measures?
I think yes, but I think that also requires a bit of a, to be blunt, a bit more of a carrot and stick approach. And I think we do a bit on the carrot side in terms of, there are various products that you can take up that sort of signal the right things. I do worry though that there's still an implied view, and a very strong implied view across the country, that when things go to hell, the government will come in and just make sure everything is fine again. And that's just not going to work in the future. And I do think that part of that needs to be, and this was one of the concerns that we raised to Treasury after Cyclone Gabrielle, is that if you go in and you just immediately buy everyone's property out, you're setting a benchmark for the rest of time. What does every other household in New Zealand now think? The minute you get a little flood, government has to, they did it for Hawke's Bay, they did it for parts of Auckland. If they do it in my hometown, they need to come to the party and buy my property out for it. And I really worry about that, because it says, why would I change how I do it? I'm going to sell it to the next schmuck and hope that I'm just not the one left holding the can. That is how the current setup around things is. And so I do think that there needs to be stronger coordination between both industry and government to put a line in the sand and say, actually, at some point, we're just not going to do this. And that's okay, because there's clear risk. And if someone by now hasn't figured out their house is in a challenging area or has risks, then they've clearly not been looking out the door. Without that, I worry, though, that we'll continue into the future until another big event comes through, and by the time it becomes bigger than Ben-Hur, you can't pull back. It's become a financial shambles, and you're in way too much risk.
And the climate, to Barbara's point earlier around giving notice, the Climate Adaptation Working Group, I think, suggested 20 years notice. So that's a lot of time to come up with a solution. And I think that went down in certain quarters like a cup of cold sick, basically.
And we should have done that 20 years ago to start the process then.
We are hearing both National and Labor say we're not going to buy you out forever, but that means the industry in the country needs to come up with a way to be ready for that, right? That'll happen faster than anyone realises.
But Katie, I'd also make the point, I'll believe that when I see it. Like politicians, with all due respect to all of them, are much more able than everyone else to do one thing and say the other, in a sense. And so, again, I'm hard to believe, right, as a former political... Right now. But what I mean by that is, until someone comes up with an actual policy and tells households that actually, look, government will not do it and that you will just be left by yourself, and therefore you can put some of this stuff on limbs and otherwise, because otherwise there's no signal, I won't believe it until I see it, because at the moment the quite clear evidence of 2 years ago is that they absolutely will come in and do it without sort of any, well, they put together a structure, and I get that, and they had to put it together at scale, but without it at the moment, I really don't have a lot of confidence that would change if we saw another event like that tomorrow.
Did you have something? No. Just on another issue, Antonia, not that your current job isn't big enough, but you're also co-chair of Champions for Change. And we talked before about the global rhetoric around climate change. What are you seeing around diversity and inclusion with that? And are you noticing a change in New Zealand?
Well, the irony, funnily enough, so Champions for Change is a group of businesses, I think they're about 60 now, or 60 members, and I am a member as a champion, who hold ourselves to account and our businesses for account to improve diversity effectively and help each other with ways to do that. Now, we've actually grown. Our membership has grown in the current year, not reduced. There have been at least one I know of, subsidiary who's come under pressure, and they're just, well, we're not going to be a member anymore, but it doesn't mean we're not going to keep doing what we're doing, because this, again, it's like climate. This is financial. If you take a cold, hard reality check, in 2038, I think it is, 35% of under 14-year-olds will be Maori. If we can't attract them to our organisations, what sort of organisation are we setting ourselves up for the future? We have workforce shortages from time to time. 50% of our workforce are women. If we don't have organisations that make it easier for women to come and work for us, we don't represent our customers, we don't have the diversity of ideas around the table. The little example I always remember, and it might have been from Invisible Women, was a games console manufacturer going out to Asia, an American manufacturer going out to Asia with their new console, saying, isn't this a wonderful thing? I don't know, that I'm not a gamer, but you know what I mean. And the Asian people in the room, the Asian people in the room picked it up and said, well, this is no good for us. It's too big for our hands. That is why you need diversity. That's just a small reason why you need diversity. So, this isn't wokeness again. I think there's areas you could probably say it's been taken too far, but this isn't wokeness. This is cold, hard financial reality.
Yeah, I mean, for my sins, I've been chairing our recruitment for the last 5 years in the Foreign Ministry, and I think one of the things on diversity is also important is it's the diversity of thought that can make a difference. Now, I mean, frankly, I still don't understand Gen Zs at all, and I've got 2 of them, but it is getting those different perspectives and different views, you can't just, if everybody walks like me, talks like me, and thinks like me, you're not getting the same outputs. You're not getting people looking at things from a different perspective, and you need that, and you need those different viewpoints. So this isn't just about demographics; it's actually the way people are thinking, and I think that's just as important when you're getting into that diversity conversation.
And it's back to what you were saying, Brad, about when you're looking at recruiting, is actually looking those people who are sitting there unemployed, waiting, looking for jobs, they may be providing that voice you need.
Totally, and if you don't connect with them on their level, then at some point, again, the labour market at the moment is in a certain position, but businesses are having to take a much longer term view at where demographics and similar are going. We know that at the moment we've got a very low birth rate. We know that we've got an ageing population. Yes, we know that those over 65 are increasingly working longer as well, so that changes the profile a bit. I think the worry though is that not everyone needs to go and start doing TikToks about Skibbity Riz, Ohio and all that sort of stuff. But seriously, I see some businesses, I'm like, okay, you're leaning in way too hard there. I think the idea is more like...
And maybe some politicians too.
Well, very much so. But you need to have a bit more of a profile, I guess, across the workforce, in terms of all different sorts of diversity, so you do pick up all of those different trends that you might not otherwise. And I think increasingly, though, for young people is that at the moment we're on track for having, in some parts of New Zealand, 3 times as many people leave the workforce every year than are coming in. And that does increasingly mean that we are going to be more reliant on migration and similar. If that's the case, and you're not then catering or thinking about how to work with people that are not exactly what everyone in this room might be used to working with in terms of all the demographic profiles, then you're really going to struggle to attract them, because they're going to say, well, that's not really a company that I feel like I can fit into. I don't understand you don't seem to understand me, you don't seem to want to, and so therefore you will struggle at some point, maybe not now, maybe not in 10 years, but in 15, 20 years' time, to find the people to keep your business going, and that is a really major risk. You're not going to have succession and everything else. So again, you don't have to completely fall over yourselves to go down the latest TikTok trend. I do think you've got to be open enough to the conversation and figure out not only where you can learn a bit more, but also where you can go and find other people that do. Sometimes it's hiring that sort of younger person who is a bit more of a bridge. They don't have to be the youth representative, but they can just give you a slightly different dynamic so that you can have the webinar chat that I gave you earlier. It's just those sort of things that over time will either, in my mind, probably make or break your business.
Are you still the youth representative for the economics industry?
Well, no, I know a number of much younger, much better economists coming up after me. The challenge is that the moment you put us in the spotlight, our sort of, all our various social medias blow up so much more. I mean, Katie, you've been a TV reporter. How many times do you get feedback on your appearance relative to the story you did? I do... This is a much wider chat than what we're going into today. I do worry a little bit, though, about, I guess, the risk of we all want people to sort of do more and more and more, but we also are more than happy to pillar them for putting their sort of, head above the trenches there. There's a challenge around what people are willing to do and how much we're asking of them.
Just back on climate change, a question from the audience here, and just quick answers from each, but what are your recommendations on how government and industry can communicate climate transition intentions, directions more honestly and avoid that ideological pushback?
To be honest, I'm sitting there thinking, well, they could all come to the Climate Change and Business Conference, because we had talked about this stuff for 2 days, essentially. And, I think there is quite a good conversation that is happening. I think business and government are engaging quite significantly. There is, obviously you can always do better, but I do actually think that more and more people are understanding. I think in New Zealand, that certainly my feeling from the last conference was everybody's increasingly mainstreaming climate change. It's an issue that gets discussed. Most big companies have a sustainability rep who's offered the reporting requirements or the disclosure requirements. So there's a whole range of issues where this is becoming mainstreamed. I think someone described it, it's now an adult at the table. And I think for me that is the critical element. Government clearly hears that. There's still work to be done. Perhaps some of the green tape needs to be dealt with. But I think in general terms, the progress in that space has been pretty positive.
I'd be more looking for a bit of a common core of information that we're all working off together rather than everyone doing their own thing and therefore coming up with different answers.
Yeah, I think that fact, so I was going to say similar, is just the fact-based, facts up front. This is what let's agree on the facts, and then we can start more easily talking about what we do about them. And I'm not sure that's still there.
And we've just got a couple of minutes left from each of you. Can you give us a prediction? How worried are you about the future in terms of some of these global issues where are we at? What's happening next? Take your pick of those.
I'm an optimist. You could. I like it that we're a long way away from the rest of the world at the moment. Part of it, you look and you draw parallels with the 30s and things like that. So things are changing. But I'd like to think that we know what good looks like and that we can strive for it, and that in New Zealand in particular, I think we've got enough green shoots that we will see things get better through next year. I really genuinely hope that. So I'll keep my optimist hat on.
I don't know how many times last year I said survive till 25 and
Stay in the mix till 26.
Is it going to be fixed in 26?
I look, economists are, depending on your viewpoint, either realists or pessimists, and I feel like normally the latter seems to be normal. But I guess what I'm sort of seeing and hearing a lot more is that, look, there are some bigger changes that will be supporting better economic activity in the future. That's absolutely true. But if you're waiting to get back to the Mount Everest of the economy back in 2022 when spending was going great guns and house prices were super high because we'd way overinflated the economy and then we got record inflation, I don't want to get back to that. And if any of you in this room do, please tell me which bits of the bad stuff that you're magically not going to have at the same time. Like, I think we're trying to find a bit more balance. But what also I think comes through is that amid all of the uncertainty globally, amid all of the changes, that's one of the areas that I think businesses has got to balance a little bit better, is recognising where it doesn't have an ability to influence. You've got to keep enough of an eye on what's happening with tariffs and similar to react and respond to them, but not so much doom scrolling, because I don't know if any of you have tried, but so far the president of the US has not replied to my tweets asking him not to tariff. Like, that's not in our wheelhouse. The other stuff that is around your costs, is around your talent and retention. It's around how you're going out and sort of thinking about innovative solutions for the market. So I think instead of the last couple of years where it's been a little bit easier for business to sit back and wait for changes to happen to them and then respond to it, I think we're having to be a little bit more forthright as business ourselves, stop waiting on government and similar to do stuff and go and sort of make our own future.
Does President Trump reply to your tweets?
No, he's not replying to me either. To be fair, I haven't tweeted him though. So, but I think I'm like you, Antonia. I tend to be an optimist, and I suppose one of the things I'm an optimist is looking at it's a tough old world. The geopolitical upheaval is significant, but one of the things I think we always is when we look at ourselves, we come to underestimate the positive view of New Zealand and New Zealand products internationally that is still out there. You know, the reputation is strong. We consistently, when you look at a soft power index, New Zealand is well above where we should be for a country of 5 million at the bottom end of the world. People often conflate us in size with Australia, for example. We know we're not like that. We worry about how we look, but that view of New Zealand and the quality of what we're producing is demonstrated in the fact that we're actually, from an export perspective, we're actually not doing too badly at the moment, leaving aside the tariff issue.
Nice to end on a positive note. Thank you all. Please join with me in thanking Stuart, Horne, Brad, Olsen and Antonia Watson.